Hello traders, Gary Wagner here. Just after 10:30 in Honolulu, 4:30 in New York. It is Monday, June the 12th, 2017, and this is the Daily Report for Gold and Silver. With the FOMC meeting scheduled to begin tomorrow, we have a continued weakening in both gold and silver pricing. Platinum and palladium, however, are moving the other way. Interesting activity in those white metals, but first to gold. Gold is off about $3.50 on the day, currently trading at $1267.90. It is traded to a low of $65.60 and a high today of $72.40. So we are much closer to the low than the high, and we are trading off about $3.50 on the day, this being the fourth consecutive day of lower pricing in gold. But that is nothing that pales in comparison to the kind of drawdown that we're witnessing in silver today. Silver is trading off about 28 cents. It has broken back below $17, but it is off by over 1.5%, 1.61% in terms of the net drawdown. Tremendous drawdown in silver as they are aggressively selling the precious white metal. But there's other white metals that are faring much better. Platinum, for example, that is trading up about $3.90 today, a net gain of 0.4% at 944. But really the big winner today in terms of percentage gains has to be palladium, trading up 1.82% higher, almost a 2% gain on the day, currently trading at $871.90, up almost $16 on the day. We do have platinum and palladium continuing to drift closer in price or go to parity between each other. So traders, now for the fourth consecutive day, we do have gold prices drifting lower. What is interesting about that is, if considering when this market really began to rally, of course that would be right the first week of May. If we take a look at this ascent, we can see that even though there were some down days, some red candles, we did not get a point in time when we would have two consecutive days that would have lower pricing. And more than that, the lower pricing was always followed by a spike to the upside. So what we are clearly looking at with this most recent activity is absolutely different than what we have seen in the past. The last time we have seen this kind of a sell-off, although not the kind of consecutive days that we're having now, but that of course was mid-April, and that was the second part of what we'll probably label as a double top, although the market did take out the previous high that we saw back in April. But nonetheless, we are seeing continuation of the pressure that began last week immediately following this market trading lower. In terms of a place to look for support, the first place is our current price target, or where we're at, which is a 38% retracement. It is a retracement from this entire rally, comes in at around 1266. And of course, the market closed at 1267.80, so slightly above this price point. Also, the fact of the matter is that this is a very, very small bodied candle, which is occurring immediately after a very large red candle, which are the first two candles for a three-river morning star. Now, I'm not saying that we'll see that. However, if by chance, and I really don't expect it, but if by chance tomorrow's trading activity was a green candle with a higher high and a higher low, imagine this yellow outline being filled in green, then that would complete the three-river morning star. However, I don't believe that to be the case, and one of the reasons is when we come down and look at our MACD, it appears as though they are just getting set to cross, and of course that would be extremely bearish in terms of sentiment. But at the same time, realize that when we look at the MACD, or any moving average for that matter, it's going to lag behind actual price movement. So silver, like gold, has been under bearish market sentiment, also trading for the last 4 consecutive days to lower pricing, but in quite a different manner in that the sell-off was much harder. Consider this: when we looked at the gold chart just a few seconds ago, it had closed just above a 38% retracement, whereas silver has clearly broken below that and closed above the 50% retracement mark as it broke below $17 per ounce today. Continued bearish pressure would tell me that we probably will see silver prices go to $16.75 before it finds any kind of support. Therefore, my recommendation is to maintain our neutral stance with no active trades in either gold or silver. In other markets that we follow, U.S. equities continue to soften, being led by the Nasdaq Composite Index. First, Dow Jones Industrial Average off about 36 points, about a 0.2% drawdown on the day, 21,235. Standard & Poor's also trading lower on the day. That is trading off by about 0.1% at 2429. But it is the Nasdaq Composite that has shown such tremendous gains as this market moved up. That is trading off about 0.5% at 61.75, losing about 32 points on the day. So traders, very interesting action in the Nasdaq Composite. Although the composite closed lower today, off by about 0.5% at 61.75, it did close higher than it opened. So it had somewhat of a recovery. Looking at a daily chart, and you can see on this green candle, meaning it had a higher close, and the fact that it hit these lows at roughly 6,100 and began to track higher, this is very much a hammer-like candle. But the one thing that we want to take a serious and close look at, of course, is going to be our 200-day moving average and our 50-day moving average. And I really believe that until it crosses back above that, we could see a little bit more pressure, but the Nasdaq was absolutely resilient in its trading today. And lastly, do want to take a look at the U.S. dollar. U.S. dollar closed, I'll call it fractionally unchanged today, a less than 0.1% drawdown, 97.15. The interesting thing is if we look at the activity over the last 4 trading days, we can see that the entire range fell right at the top end of the spectrum, but was a very, very small bodied candle. The key right now is what the Fed will do over the next couple of days, because obviously it should be, and I say should be, bullish for the dollar if in fact interest rates are hiked up, and that announcement is made on Wednesday. At the same time, the probability and the market sentiment of a rate hike has been in double digits, up near 95 to 98 to 99% probability. That, according to the CME FedWatch, the FedWatch tool, that tells me that we could have in fact seen any kind of dollar strength factored into the market. And with that dollar strength, we saw declining U.S. dollar. So we could still see some selling in the market. And as you know, I believe we could see this dollar index go as low as 96. So traders, as you know, we pulled profits last week as this market hit those highs just shy of 1,300 and began to come down. The fact that we didn't get that follow through led me to believe that we're probably going to see some sort of a correction before we see this market break above 1,300, specifically in gold. We certainly saw that. We got out of our position right at around 78, market's at 67, so it is about $11 below the price, our exiting price, so I feel good about that. I also believe that there is a distinct probability that we will see further softening. We haven't seen signs of any kind of support come into the market, and we have laid out the levels that we are looking at for an area that we would look for support. So we want to keep our eye on that. And with the initiation of the FOMC meeting tomorrow, and of course any kind of announcement in the expected interest rate hike on Wednesday, we really want to be guarded as to when we put our next trade on. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.